The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. How's everybody doing? Hope everybody's having a great week so far. Man, life is funny. I had to re-up my braces, so my wife is joking me now. She's calling me all types of names, metal mouth and all those things. Anybody has a wife who's a joker, like the joke, but sometimes can't take the jokes. Yeah, she'll give them. But let me say one thing. Look, having a great week, still coaching my kids. We're doing well. And basketball, man, I think we're back. Even though we had a loss, but I still think we're number 2. This Saturday, we play the number 1 team. Wish us luck. Another cheer for that. Wish us luck Saturday. Yeah. Look, I have never coached basketball in my life. Now, if you're an ex-football player, what I did is I needed something to do competitively, right? So I had to play. I was a weekend warrior in basketball. Just to come home with all types of injuries all the time until one time I hurt my back. My wife was like, "That's it, no more." But man, so I'm glad I played. During the weekend, I learned a lot of things, and I teach the kids what works. And we've been doing good for my first year. We've been doing good, man. I'm so proud. All right, so let's get into it. This week, we're going to talk about charts. We're going to get into charts. We're going to get into some financial stats about the upcoming holiday. We're going to go deep into family offices, okay? That's something you need to think about. I know they say it's for the wealthy. We're going to discuss how you can start your own family office, just you by yourself, right? Starting from a brokerage account, right? We're going to discuss that. And then we also want to go into the top performing stocks. All right, we're going to go into all this. All right. Okay, that's enough. All right, so look, let me just ask you before I move forward, man, please like, subscribe, and share. I'm trying to grow my channel. It's important, and I need your help. So please like, subscribe, give me a like, subscribe, and share, and let other people know that I'm giving information out. And I've been giving some game out. Yeah, I mean, hopefully you've been on the game. Exxon and the oil stocks have been on a tear. I talked about the Dow Jones Industrial Average was going to have a good year. We just hit a milestone of $50,000, 50,000 on the Dow Jones. Let's get another 50,000. Look, man, the Dow has come a long way. The stock market has come a long way. That's why it's important for you to participate. But today, I want to discuss and I want to focus on this word, okay? This word is called hope, okay? Hope, right? And a lot of times when we have a market like this, we have inflation, it was just a report about consumers, right? It was a report about consumers that delinquencies on credit cards and other debt instruments is like at an all-time high for consumers, right? So we want to take heed to that as investors, right? And I remember when I was working as a financial advisor, we could go into, and this is something you could do. I'm gonna give you game. You can go on the FINRA website, right? FINRA.com, and what it does is it shows you like all the different. It's a government website, and it shows you all the different bodies that own securities, right? And then this website will show you that it also talks about margin debt. right? Margin is when people borrow to buy stocks, right? But household debt as a general, and usually when household debt reaches a high level that we are now, then we will have some correct correction in the market. And I can't time this. I can because you can say we could have had a correction for the last 2 years, but with AI and with the investment that the Mag 7 is doing, we may just grow our way out of all these things, right? So that's definitely going to be in the future. All right, so look, so let me just get into my disclaimer. The information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial investment or tax legal advice. The views expressed by the hosts and guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, right? And including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions, right? So, what the stock market allows us to do, the stock market gives us access, right? It gives us access to growth, right? It gives us access to ownership, right? We can own these companies. We being a part of this system, right? The economic system, United States economy, right? We have access to the largest stock market in the world, 51 total trillion dollars when you combine, right? Which is, and we also have access to the largest market, the largest economy in the world, right? So it allows everyday people to become wealthy, and this doesn't happen everywhere, right? This allows everyday people to become healthy. So what happens is that I know that things can get rough. Your paycheck doesn't go as far as it used to, right? The cost of housing. Most people are priced out. Most young adults are priced out with housing right now, right? But what you can do, right? What you can do right now, right? And I know you can start. You can start a brokerage account, all right, and start putting money in a brokerage account and begin to invest, right? And those who are seasoned investors, right? This is our time. This is a great time, right? Continue to put money in the market. Now, I'm saying to be cautious right now, right? This is February. It's one of the lowest volume times in the market. I'm going to talk about stock market volume this week. And one thing I've noticed that the volume has decreased, right? At least this week. It could change. All right. But what I like to see is I like high volume in the market. It means a lot of shares trading, right? And when I see that the volume of shares trading is going down a little bit, or it's not close to the average, it's lower than the average shares traded, then I get concerned, and I think we're going to have a slowdown. All right, so those are the things I'm looking at. So let's look into the market right now. So February 11th, the Dow Jones Industrial Average, man, we closed above 50,000. It's a big milestone, okay? I want you, when you go home and you look at some of these charts, right? You look back, 5, 10 years where we came from, and this is just the start. This was we're talking, and we go back to 2026 years ago, right? And kind of 1999, which was the beginning of the internet, right? Everybody was like, man, uh, uh, $50,000, 50,000 Dow, S&P 500, 7,000, or a Nasdaq close to 24,000. I mean, 23,000, right? You never thought those numbers. And let me tell you, the internet definitely the what they built out in the internet, in regards to websites and the whole online movement, right, is now being done right now with AI. So where we think 50,000 is a lot right now, in the future, we can be like, man, I had a chance to invest when the Dow Jones was at 50,000, right? Some people call it Dow 80. 80,000. I think Trump just recently said the Dow Jones Industrial Average is going to be like 80,000 when he leaves office. All right, so we don't know, but it's a great opportunity when we get to invest in this market, in this system, which is the greatest system in the world. And the incentives are for people, right? For people to come together and use their talents to create these great companies, right? That make our lives better. All right. So, and guess what we get to do? We get a chance to access that knowledge and that capital by investing. When we're investing in the stock market, right? Stock market allows wealth to be distributed amongst everybody, right? Because in the past, before the financial system came, when somebody decided to create a plant or whatever, right? They could just create the plant for themselves and keep all the wealth for themselves. Well, when financial markets came along, guess what happened? Right? When financial markets came along, now everybody gets to participate, right? And that's one thing that MLK wanted. He wanted us to participate in the financial system, and this system that is a great system, and we get access to this system right now. All right, so the S&P 500, 69, 41, 47, and the NASDAQ, 23, 66, 47. So the S&P was down lightly, and the NASDAQ was down 36 points. All right. So the Dow Jones Industrial Average. Remember, what I always say, the stock market is a time machine, right? Time machine where we compound forward. When the market moves forward, when everything is positive, right? And when things are negative, it discounts back. So we compounded forward, and last week I think uh the end of January and the beginning of February was a little shaky. We had some shaky days, but the market is starting to take off again. I still believe that we have some turbulence coming. Like I said last week, we still have some turbulence coming. And I said that now, if we look down here, look at the bottom, you see that we have the volume. You see VOL. That's the volume, and then we have the average volume, right? And I cut it off a little bit, but it was 540 something, right? So the Dow Jones Industrial Average has continued to have more shares than its average volume. And that's what we want, right? That's a positive sign. All right. So the low for the week since last week was 48, 8, 47, 46, right? And as you see, we hit above 50,000 points. Excuse me. All right. So the S&P 500, once again, the S&P 500, but look at the difference in the S&P 500. The volume, the daily volume, right, was at 3.474 billion, but the average volume is at 5. So we're below the average volume. So the volume in the S&P, that means there are less shares trading. When less shares trading, there's less people buying and selling and moving the stock market. So the volume has cooled down a little bit. All right. Look at the NASDAQ. And I cut this off. But the NASDAQ was well below. Sorry about that. Man, this happens when you do everything. One day I'll have people to help me do this. But right now, I don't. So anyway, NASDAQ. All right. So the NASDAQ, when we looked at the volume, right? And that NASDAQ was pretty close. And NASDAQ was above average volume, right? The volume for the day was 8.64, and the average volume is 8.50. So if we think about it, the NASDAQ is doing okay in volume. I love to see that when the daily volume is over the average volume, that means that there's interest in the market, right? And we want interest, right? If you're interest, that means that people are thinking positive. If there's no interest, then people are usually staying away from the market, and that's when the market starts discounting. All right. So in the news, I thought I discussed Valentine's Day, right? Make sure I pronounce it right. But the total spending this year is expected to be $29.1 billion, a new record. And the average person is going to spend close to $200, $199.78, which is also a record. And says 55% of consumers will celebrate Valentine's Day. So where the money goes? Most popular gifts, right? Candy, 56%, flowers, and I remember reading about Berkshire Hathaway's candy company. Oh my gosh, I can't think of the name of the company. But I remember reading the annual report, and he said that they make like 80% of their volume for the year is done on Valentine's Day. Valentine's Day, right? So 80%. So you got the whole year, and 80% of their sales will occur during Valentine's Day. I thought that was phenomenal, right? So you have one time of the year you're going to make all this money, and then throughout the rest. I mean, within I think he said within the week before and the week leading up is the time that he'll make those profits. All right. So I thought that was something. So let's look at the top stocks, the Dow Jones Industrial Average top performers of 2026, the Dow components, right? So Honeywell International, which is aerospace technology company that builds parts and components, right? They're up 20.2%. Honeywell's been around for a long time. All right, Chevron, right? One that I discussed early this year, increased 18.3%. Right? Verizon Communications, up 15.1. Verizon, okay, Verizon and Johnson and Johnson. These are old school companies that are really doing well. And this is just at the beginning of the year. So if you annualize these numbers, right? Man, a lot of these companies are doing 10%, close to 10% a month. Now we don't know if they're going to continue to do this. But this is crazy. This is something to look at. And this is the Dow. This is what I've been telling everybody that the Dow Jones, I love the Dow this year, right? And not only this year, but probably for the next few years, the Dow Jones. And I'm gonna tell you one thing that's going on, right? One thing that's going on right now, right, with the Mag 7. So there's a term called asset light, right? Asset light businesses. So asset light businesses are businesses that really don't need like when you compare a railroad to a railroad company that transports railroads versus a Facebook, right? Facebook is asset light. Most of his cost is the servers that they hold Facebook, right? So they don't need a lot of components and heavy metals and materials to run that business, right? So that's one of the reasons why technology is running, because those companies are asset light, right? Well, what's happening now, because they have all these investments, right, in these data centers, right? The data centers, now they're becoming asset heavy, right? All the debt they're taking out. So that's one of the reasons why technology this year, right, is not performing the way it did in the past, right? This year, because they're taking on all that debt and they're not considered asset light. Think about it, right? If you have a business and you need to keep, for example, if you're running a restaurant, right, and you got to keep buying new stoves and different things like that to make the profit, versus a internet business where people just come and pay you, and everything's online, right? Well, those things cost, right? For you to make your money, you have to continue to buy those. Well, for an internet company, they don't need those things. But what happens is now they have the data center. So now the data centers become those heavy assets that they have to buy, right? The equipment building out the data centers, all the equipment that goes in the data centers. Man, I remember I was just telling my wife that, man, our kids need to think about being electricians. There was an interview on, I forgot the guy's name, he's an investor, and he was discussing how he was a part of big investor in Facebook, and he was saying, look, our electricians cost just as much. I mean, we pay them, which is like $500 to $750,000 a year. We pay them just as much as we're paying the some of their engineers at Facebook. some of their top engineers. They make half a million to $750,000, right? So they're paying that. So being an electrician right now, I would be whoever the data. I would leave my home and say, baby, I'm going to work where these data centers are, and I would try to go and make some of that money. And that money, well, they're saying because all this investment in AI, they're saying that this investment will go on for years to come. So I know that we wanted our kids to be programmers and whatever. Well, you know, um, um, Chat GBT, have taken away because they're going to do all programming. You can do it. They'll write code now, right? But the electrician, yes, it's a physical job. Yes, you're going to have to. That's money, So think about it. Having your kid do a trade. Um, depending how old your kid is, that's something you need to think about. But they make just as much as the engineers at Facebook. They're paying electricians. That tells you that the high demand and what's going on, right? Things are changing. It's not like it used to be. Things are changing. All right, so look. So let's go into so we did the top performers, right? I'm sorry. So let's go into family offices, right? Family offices. What is a family office? A family office is a private organization set up to manage the wealth of often the whole financial life of a high net worth family. We're going to take high net worth family out of there, right? And it could be you could set up your own family office, right? And look, it could start with an investment in a brokerage account. All right, so let me go into why they exist. Build to handle complexity of investment, taxes, states, philanthropy, risk management, reporting, bill pay, and a whole ecosystem, right? So basically, you're building a whole ecosystem for your finances and for your family finances. And a lot of times, family offices are created, for families who maybe, you own this business and then your parents end up selling this business, right? They sell a business and they create their family office to continue to take that money and generate more money. Okay. And where they still have and have somebody to manage it. So there's two main types of family offices, okay? There's a single family office serves one wealthy family, or there's a multi-family office. There's a group of families get together, and it's more cost efficient and like a boutique wealth firm, right? So you basically got a firm, a wealth firm focusing on your family's finances and maybe a few other families, right? So it's not like you got I worked as a financial advisor, and for you to make money, you needed a big book of business, right? Instead, if you have a whole lot of money, then you can pay this one person to manage. Well, guess who that one person is going to be for now? What I'm teaching you is that you need to be the one person. All right. You need to be the one person handling you need to be the one person investing and starting with a brokerage account. And once we build the brokerage account up, let's look at what the family offices invest in. Right? They just they invest in real estate portfolios. So you start with a brokerage account. Make some money from your brokerage account. Boom. You're have a real estate portfolio. Buying operating businesses. One of the big movements now is buying one of the big movements now is buying small businesses. You can go out, build up your capital in a brokerage account, have a piece of real estate. Boom. Then you can go out and buy you a small business, something that you like, something that you always thought that's already generated money, right? You can also look into private equity, private people who are starting small businesses. Now you got this capital. Now you can say, look, I can invest in other people who maybe somebody, my cousin or friend is starting up a restaurant. He's been doing this all his life. He just needs capital. Guess what? That's private equity. You go invest in private equity. And then you set up a chat. Remember, first fruits, right? And the foundation of first fruits is investing, right? And then giving a portion of your investments away, right? So being charitable, creating your own charitable foundation, right? My wife and I, we have our own charity. We have a gosh, can't think of the name of it, but it's a fund. It's an investment fund, strictly that we give money to, right? And in this fund, self-directed, um, I can't think of the name of it. I'm so sorry. Look, but it's a self-direct. It's an account that we use, and what we do is we decide on where we're going to give money to, right? And these funds throughout the year, right? We put the funds in there throughout the year. Then at the end of the year, or end of the year, or as we see people who need funding, for a charity or whatever, or for a cause that we agree on, we then give money away out of our investment. So we had this pool of money that's growing, right? And we have to they have to be a legit nonprofit charity that we give to. All right. So this what I'm telling you is that this is the financial system you can set up for your family. It's something, of course, I wouldn't be talking about if I'm not doing it. Okay. But it's something we set up where we're investing the brokerage account. We have a account we give away. I looked into owning business, but I have my investment club. That's my business, right? My investment club. All right. And and this is the system that I'm using. This is a system you can create for you and your family, right? And it starts with that small seed. All right. So as investors, right, and we keep managing our brokerage accounts, we keep once we get our accounts up to a certain level, then you can look at other things. I like just investing in dividends, right? I don't, businesses are great. There's tax advantages, but you got to deal with a lot of people. I just know I treat my dividend account, my dividend account, what I preach to you as a business, right? So I treat it as a business. It's my business, then it funds my investments, and then I have my investment club, and that's how I run it. But you can create your own family office by doing those things by small. So don't think of it just as a simple brokerage account. You can create a whole lifestyle around this, right? And when we follow the system, right? When we follow the system, First Fruits gives us hope and a vision to move forward in our finances when we may feel that we may have not done the best in the past, but we can always improve. But we got to start, right? We can always improve. And if we and even if we're investors and we're investing in the stock market, we have to continue to take our investment to the next level. Why not join a group? Okay, why not join a group that can help you get to that next level, that give you the formula that you need? All right. So, man, great show, a lot of good information. I hope you take heed. I appreciate you guys giving me a few moments of your time once again. Um, and man, I just think that this is a time, man, a lot going on with Bitcoin. I went into Bitcoin last week, but I showed you that head and shoulders. That head and shoulders, that pattern is there. But I think, like I said, there's a there will be a humongous opportunity in Bitcoin, right? Investing in Bitcoin, dollar cost averaging. Look, this is not investment advice, but if you go back a few years ago, you said, well, man, I should have got into Bitcoin. Well, you're getting another opportunity for the price. And I think the price is going lower. All right. So man, everything you can do to try to find money, try to squeeze money out of your budget. All right. And when you put investing and giving at the front of your budget and not what you have left over at the front, because you do have your leftover and then leftover never comes. But if you make it a habit of putting it first, and not even, I'm not saying a lot, right? Just a habit of doing it, putting the money away first before you start spending on your household. And I know if you've been operating that for the last couple of years, it's hard to reverse it. But you can start by putting a few dollars away. All right. So, but as investors, look, I just want us to be careful right now. I just want us to put money to the side. I like investing in the indexes, being a little safer right now in the indexes. There's single stocks, there's single trades out there, right? But I'm just a little bit more cautious right now because the market it's just been a little crazy, and February is usually one of those months. And I think February and March are going to be 2 months. But, like I said, dollar cost averaging, if you have monies, just buying little small portions, but also building up cash in your brokerage account and being ready for the opportunities that are going to come, I think, our way. All right. But still also investing, because what happens is if you think, well, it's going to go down, you'll never invest. Oh, it's going to go down further. You're not going to do it. All right. You're going to be nervous. You're not going to do it. But if you do a little bit here, save a lot of it, a little bit here and there when the market, especially when the market is down. All right, putting a little bit here and there, small amounts. Okay, then I think you'll be successful, and you'll look up at the end of the year and be happy in the progress you've made. Thank you so much for giving me a few moments of your time, and until next time, you guys be
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.